Hey everyone. SoFi CEO Anthony Noto participated in a investor conference with JP Morgan on May 24th that delivered a lot of really good insights for investors interested in SoFi stock. So I've gone through the report, I've done some analysis, and I've got some videos coming out regarding all of the key insights that came out of this investor conference, starting with SoFi's long term strategy and is it right for you as an investor? So let's begin with this video right here. So, a question came from JP Morgan analyst Reginald Smith asking, what are you trying to do and the problem you're trying to solve and for who? And in other words, this is just a big picture question for SoFi. What are you trying to do? What's the business model? Who are you trying to serve? What's the customer segment? What's the total addressable market? And so on. So, this is a key when you're looking at investing in a stock. You want to know these things because that's a big indicator of whether or not you want to invest in the stock is the customers they're serving and how they're trying to serve those customers and with what service. So CEO of SoFi, Anthony Noto, jumps in to say, our goal is to help people achieve financial independence to realize their ambitions. All right, so that's a really big goal there. That's really broad and it helps to narrow that down. And the CEO does narrow it down a little, going further and saying that people need a bank, they need a financial services company that can be there for everyday things, but also for all the major financial decisions in their lives. So that gives us a better perspective of what SoFi is trying to be for everybody. And they're really trying to be an all encompassing place that has everything you could need in terms of financial services, whether it's just your typical everyday banking transactions where you have a debit card and you have money in your account and you use your debit card, or if it's bigger picture items like buying a home, getting a student loan, getting insurance, and things like that. So they want to do it all. They want to be all encompassing, which could be good and could be bad. So the good thing about that is that it gives them a wide scale. So when they attract the customer, they can then sell that customer one product, two products, three products, four, five, six, seven, many products. And because they're already a customer, it's not that expensive to sell that same customer another product. So it gives them that advantage. On the downside, it kind of reduces their focus. It spreads them out really thin because they have to offer all of these different services, and that makes it they can concentrate less on any individual service because they're offering such a broad range of services. In fact, if we go to the SoFi website, you can look here. This is their products page. And so they've got a checking account, savings account, a credit card. You could track your credit score. They've got investment accounts where you can invest in stocks, student loan refinancing, personal loans, all separate types of investing in loans, mortgages, private student loans, insurance products for your company products, and small business financing. So they're working across a broad range, offering all of these different products. So they really, it's like a one-stop shop. If you need a bank, you need a financial company that handles your transactions, loans, insurance, everything financial you could possibly think of. SoFi wants to be there for you. It wants to be your partner throughout your life and build that relationship, offer you different products, right? And that's kind of what the CEO is saying here. So we want to be there for that relationship every day and to be there for all their major things, which means we have to help them borrow better, save better, spend better, protect better, and invest better. Those are all the range of products that SoFi is attempting to solve. And really, you look at that and you say, how are they any different from Bank of America or JP Morgan? And they're different in a number of ways. And without getting into the details, the one big difference is that SoFi does not have the massive physical presence of a Bank of America or JP Morgan. So they don't have all of the branches. They're more focused online. Second, SoFi offers very, very high competitive rates to attract customers into their accounting system, into their bank, right? They offer you a very high savings rate, a very high deposit rate, so that you will be more attracted to moving your money and banking with SoFi compared with one of those other banks. So as an investor, you have to ask yourself, which do you feel is a better investment here? The bigger banks that's already established, that have all those physical branches and have decades of relationships with customers, or the newer bank with relatively small physical presence and ATMs and branches, and focuses more online, but also focuses on providing better customer benefits to attract customers in the way people bank today, right? Because people don't want to go into a bank today anymore, right? They want to do all their banking on their phone. They don't want to have to go to a bank to deposit a check, right? So it's interesting, and it certainly provides a lot of insight, and it gives you information as an investor to make a decision. Is this business model right for you? And so that's an individual decision. I can't make that for you and say, yes, this is, this is a great business model. It should be right for you. The answer really is that it's going to depend on each individual and your investment time horizon, your risk tolerance, and many other factors that go into your decision making, whether or not a business model is right for you. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.